right, so happy to introduce Hernan here, founder of Apprentice and Worldwide Financial. He's worked in a couple of different areas, including his current role as general manager at Banreservas. He also is on the board of ITFA. And without further ado, I'm going to turn it over to Hernan so he can teach us about trade finance.
Well, we're going to talk a little bit more than trade finance here. We're going to talk about our lives and ourselves and things that are worrying us right now. But most importantly, let me start by introducing myself real quick. So yes, I'm the founder of Apprentice Worldwide. I started it in 2014 to empower and support young professionals and executives. And I don't do it alone. I do it with a bunch of mentors from around the world with big hearts that are always willing to help. And last year, in the summer of 2024, we launched the Worldwide Financial Network. So the Global Industry Group, Finance Global Industry Group, which were all the people in banking and insurance, fintech, corporate finance, and wealth management, decided to come together and help Apprentice by creating a separate network that will help not only do events like these where we share our thoughts and ideas with the general population, but also to fundraise a little bit for Apprentice Worldwide. So that's two of the reasons why we did it. So today, this event is hosted by the Worldwide Financial Network. And you can find out more about the Worldwide Financial Network by going to worldwidefinancialnetwork.com. And you'll see our more than 500 members that we have there in numerous countries. You go to our community there and you can find everybody there. Today, I wanted to talk to you guys a little bit about a subject that is near and dear to my heart, which is trade finance. So what is trade finance? So if you were to simplify this, it's a transaction or exchange of goods and services between probably a foot of distance or more. So this is important that I mention because when you talk about global trade, right, you think that it's only two countries, but it's also what is happening across the street and how a local seller, SME, is impacting a middle client or a larger client when they provide a good or service. So with that said, I have been a trade finance banker for probably around 25 years. I started my career in a trade finance bank called Hamilton Bank in 1994 after going through several internships in finance and marketing. And I started as a credit analyst, analyzing trade loans and also banks. Ended up working in corporate banking in the group, where I primarily visited warehouses in Doral and around Medley to pitch the bank products, but also had some larger clients like Tire Group International, Perry Ellis, which was Supreme International, Cargill, which was the largest supplier of Sears goods, Craftsman and Kenmore for Latin America, and learn a lot about supply chain as these people were buying stuff from China from the early 80s. And that is something that I want you guys to keep in mind, because when we hear the word China, sometimes it could be good and sometimes it could be bad. And we're going to talk about all these things in a little bit when we talk about tariffs. But as a trade finance banker, what do I do? So I consider myself I consider myself a conflict resolution executive. So why am I a conflict resolution? So think about it. The person that sells wants to get paid immediately, right? And the person that buys wants to get the goods today and pay later. So therefore, I'm always in a conflict resolution mode, because what I try to do is to help people facilitate global trade by not only providing a best case scenario for both. And that is a hope, no? in reality, we do know that there is a clear imbalance between a large multinational and an SME, right? So when you're a large multinational, you basically think that you command every single aspect of the supply chain. I'll share with you. I don't want to go through my career. I guess, Ignacio, you know a little bit about. You mentioned a little bit. I worked for many banks. I worked in correspondent banking, structured trade finance, et cetera, et cetera. But the anecdote that I can bring to what's relevant today is I used to be the trade finance officer for Walmart and Home Depot, and the reason I became that is Mike Babbitt, you would know, is that Bank of America bought Bank Boston's operation and then decided to sell the Latin America operation to Banco Itaú. And Home Depot, Chevron, Texaco, Walmart all had operations with Bank of America in Latin America that were sold to Banco Itaú. And they started complaining left and right. And that was in the year 2006. So as a result of that, guess who was called? At that time, I was working at a bank called Commerce Bank, TD Bank, as a corporate banker. And they knew that I had run trade product at Bladex, the Trade Bank of Latin America. And before that, I was at Wachovia, Wells Fargo, managing structured trade finance. And they said, you know what? We cannot wait. We need somebody to help us out. Put these programs in place back again at Bank of America. No longer at, they did not want to deal with a Brazilian bank. They wanted their U.S. bank to handle their business. So thank God for me, because I got hired that day. I worked around 9 years at Bank of America, and my primary role was to help people come up with solutions around the world to arbitrage opportunities, like I mentioned, no? And this arbitration, one of the situations that used to happen for Walmart was that they were the first ones to, like in a scenario like what we have today, where we're panicking, right? So Walmart wanted to improve their cash flow. And guess what they did? They told, they basically told all the suppliers that they wanted extended payment terms for an additional 60 days. So imagine the burden for suppliers in China or all over the world that had to finance now an additional 60 days to supply to Walmart. So guess what happened? Retaliation. Walmart's prices, which is Walmart's known as the low-cost leader, well, Walmart prices started going up. And therefore, they said, wait a minute, pause. We can't handle this business. And the suppliers around the world said, you know what? Sorry, but we have to finance this now ourselves with our own risk. And Walmart sat down with their bankers. One of them was Bank of America, and decided to put in place a global supply chain finance program that allowed for the small business suppliers around the world to piggyback off Walmart's credit risk and be able to finance their operations that way. My biggest anecdote was I went to Brazil. I went to Shenzhen to go to the vendor finance forum for all the Chinese and countries, proximity countries, at the Shangri-La Hotel. Chris, you that know all these places. So in the Shangri-La, I was there with around 5,000 vendors for Walmart, out of which we had a big line, and we had basically several tables and the Chinese suppliers lining up. And every time that they said Mexico, Brazil, Central America, Chile, they would call me, Hernan, come over here and explain to them what the programs are to be onboarded as suppliers. So again, fascinating world that we live in, because now, right now, we are having a tectonic shift in the global supply chain. And by the way, I have to take my hat off to the Chinese, right? Because the Chinese took every single advantage that they could to be also a lower cost provider of goods primarily due to economies of scales, right? But guess where they got their money from primarily? From selling to U.S. consumers. So for years, the United States has been basically subsidizing the Chinese economy for years. And therefore, I don't know if you have seen the latest statistics, but the U.S. has now fallen into a secondary category into most of the countries as a main supplier to most of the countries around the world. So probably around 75% of the buyers in the world are China is their number one partner. But as you probably know, things do not stay the same for long, no? So I will share with you, working for the federal government for years, that an interesting statistic that you probably do not know is that the largest buyer of goods in the world is the U.S. federal government. And therefore, you have to understand that being the largest buyer of goods in the world, everybody wants to sell to the U.S. government, including SMEs around the U.S., right? And that are trying to get an upper hand to be able to line up to what the requirements are. And this is a lot of the work that the Small Business Administration does throughout their more than 60 offices around the U.S. Another thing that you're probably not familiar with is that around the world, U.S. embassies have what they call commercial attachés, people that are working to make sure they find opportunities for U.S. goods around the world by connecting the suppliers in the U.S. to buyers around the world. And banks participate in missions to help look for ways to finance or fund these transactions. So also, I wanted to share with you the importance of trade finance. And I wanted to make it simple for you. As a small business, very likely, as a small business, you're always thinking about how much money can I get from either the government or grants, right? To support the start of your operations, right? Because these people don't have the funds to fund their dreams, right? And guess what happens? Obviously, banks do not get involved in the process of financing up until there is evidence. There's two things that banks are looking for. Number one is ability to repay, right? So the ability to repay is based on two things. Number one, cash flow, right? And number two, collateral and cash flow. So guess what? When you're starting your business, there's not a lot of cash flow. So that's why bankers ask for collateral at the beginning, because there's not a proven concept and they are not an equity partner to these organizations, right? And therefore, they're not going to take a loss just because somebody has a wonderful, fabulous idea about their widget. So this is something that you have to understand. Banks are not here to lose money. They're here to make money. So they do not put themselves at risk, very little at risk, right? So what are they always looking for? Ways to mitigate and enhance their position. By the way, once you start generating cash flow, they also try to mitigate their position by doing something that we call vendor financing. So that's the second stage of a small business. A small business can fund themselves by their own capital, later on by their bank, and then the best is to borrow against somebody else's balance sheet. So I mentioned Walmart. Walmart, it has, let's just say that they would borrow. If they would borrow short term, which they don't, they go to the capital markets and they issue bonds and they issue equity to finance their working capital. But if they were to fund themselves in a short term basis on a year or less, they would be funding themselves below SOFR, which is the going banking base rate. So therefore, does it make sense for me as a banker to lend money to Walmart in the short term? The answer is yes. Why? Because they pay, right? And this is exactly what happens when you are doing global trade finance. You're trying to get the best bang for the buck and for the risk. So let me give you an example. Walmart, I told you, they probably borrow not even 1% short term, okay? So if I'm selling to Walmart and I am borrowing at 25% under my facility, so let's say 1 or 2% a month, right? So my goal is to shift and try to get as much money as I can based on Walmart's risk. So the first thing that we recommend as trade finance banker is to piggyback off the supply chain programs that are available, because those usually are going to be at a reasonable rate. No, then you shift into what we call factoring, which is really based on it's really based on the relationship with the seller, but there's an enhancement that is done based on the payment, but really it's not a guarantee of payment of the buyer. The only way to get a guaranteed payment of the buyer is if the buyer commits from the very beginning to pay, right? So that, by the way, bankers like to take risks. So there's a lot of factoring that happens around the world, and there's a lot of ways to skin the cat. We use risk mitigation, like credit insurance, to cover our position, right? We do ECA financing, so some of the multilaterals, right, like the International Finance Corporation or the Inter-American Development Bank or the Exim Bank, they're all trying to serve as a mitigant for exporters to be able to sell, right? But they analyze these risks around the world to be able to help these smaller suppliers usually. Not all the time, not all of them are small. So one last thing that I wanted to share before I go to the next topic is the arbitrage when it comes to a small business, right? So the small business is always going to try and borrow the cheapest way through their receivable if their buyer is better. But what is the motivation for a larger seller to a smaller buyer? So let me give you an example. Do you guys know what the ABCDs are? So the ABCDs are the largest commodity companies in the world. Well, in the United States. There's a few that are pretty big outside as well. But let's say these are ADM, Archer, Daniel, Midland. There is Bunge. There is Cargill. And there is Dreyfus, Louis Dreyfus. These are the largest commodity companies in the United States. They sell billions of dollars in commodities around the world, right? So what is the motivation for these people? Their motivation is selling more, right? So if they're selling to a country, let's just say Panama, a buyer in Panama is buying $100 million worth of commodities, they might have an appetite for that credit at $50 million, but the buyer wants to buy $100 million. So guess what they do? They find a bank to purchase or participate in this risk so that they can take that risk off their books and sell more, right? So now you're understanding the world of trade finance and where these opportunities lie based on your arbitrage. No? So now we got to talk about, by the way, am I speaking too fast, or I only have an hour, so I didn't want to miss anything.
No, don't worry.
Okay.
Hernan.
Yes.
Can I just add one small little thing?
Absolutely.
Yeah, in the beginning, when you said, trade finance is about, being able to take care, buying and selling, it's really more about securely doing that, because a company could sell to another company in another country on open account, and there is no security there, right?
That's right. Yes. Well, then we add another aspect that people forget about trade finance is that we also help in the movement or accelerating of the movement of goods through some of the managing of the documentation of the trade documentation, and it helps with working capital. Really, we are working capital financiers, right? But the fancy word for trade finance, people use it for a long, long time because it was known between countries, between countries. But really, as you probably know, right? I worked at the SBA in the Export Finance Division. The Export Finance programs were renamed the working capital programs so that it does the same thing. It just people that are doing this, an SME that is selling to a company in Atlanta, like Home Depot, right? Or Coca-Cola, can take advantage of some of these programs to be able to enhance their working capital. So it doesn't have to be, selling to a company in London or wherever around the world. So again, now I go back to the hot topic, which is the tariffs, right? So again, one of the things that I learned is I don't particularly knowing. By the way, I don't want this to be a political debate either, right? It doesn't matter whether you like the person of Donald Trump or not. The truth is that China took a lot of advantage of the U.S. more so in the past 4 years, right? And this, now think about it. So China has been amassing phenomenal wealth. What are they doing with it? Reinvesting it in technology. So now they are a lot more advanced than the U.S. in many things. So remember, this is competition. Whether you like it or not, it depends on where you live. No? If you live in the United States, you want the United States to do better than China, unless your family's in China and you want both to do better. But the reality is that the people in the United States, the majority want the U.S. to do better than China. And therefore, if it continues this same way, they are going to gobble up all the supplier channels that they can find. And therefore, now the U.S. is saying, wait a minute. No longer are we going to be the machine that feeds you. We're going to make it very hard for you to sell over here. It's going to cost you a lot more. And now it's my turn to sell, right? It's my turn to develop the manufacturing activity in the U.S. to make it so that my country is doing better. And by the way, if you know a little bit of history, I do a little bit of history. So in the 80s is when all these shifts started happening to China. So think about it. You had a person that was making $5 an hour in the U.S. in the 80s, and now you found a source in China or in Asia for 50 cents for the same. They're getting paid 50 cents for their wages an hour. Okay, so of course the buyers want everything cheaper, so they move quickly. They move their supply chains to Asia. Guess what's happening now? And what's going to end up happening a lot more if we continue to see these advances. So now you're going to be able to, most of the skilled workers are going to make $25, $30, $40 or more, but the production or the masses of production are going to be automated. So therefore, you're going to be able to make, let's say that the worker in Asia is making the goods for $1 an hour. These new ships are going to allow the U.S. to make the goods for 20 cents, 30 cents an hour equivalent. So you're going to have a lot less, manual workers needed. I've seen some memes of some fat Americans, sawing the machine and all that. It's not going to happen. It's not going to happen. Technology now is going to take over, and the one that produces the fastest, the best, and they're using AI to do that. And therefore, the only competition or the main competition continues to be China. By the time some of the other, like Indonesia, Philippines, they're pretty advanced because the Chinese are moving to those locations, right? Have moved their production to a lot of these locations. So they're getting the technology from these places. But now it is a battle royale between the Chinese and the Americans. By the way, history repeats itself. Alliances happen, right? As we probably know from history, the Chinese and the Japanese, they don't like each other much, right? And therefore, who are the Japanese going to partner with? Pretty obvious, no? By the way, the Russians and the Chinese are partnering a lot of things. Guess who don't like the Russians much? The Europeans, right? Again, because they think that they're going to get invaded, and therefore they don't trust them. So again, when I see people panicking over these global tectonic shifts, my advice is always not to panic. Is to look at these things objectively and start looking at the supply chain lanes so that you can see advantages and look at the shifts. So Ignacio, since you're here and you work for the largest logistics firm in the US, can you talk a little bit, without spilling secrets, about some of the things that you might be looking at to improve the logistics?
Well, I think the most obvious one is the more manufacturing that moves to the United States, we're going to do better, right? So as an industry and definitely one of the larger companies in the industry, we're going to benefit from the movement of that product. So it's a lot. One of the things that I think is a huge benefit is the holding capital, right? The cost of holding a product for an extra 2 weeks to bring it from China. If your manufacturing cost is the same, right? So let's just assume that technology makes up the difference. We're all paying 50 cents. Everything is good. You're still having to wait for that product to cross from China in a container for about 2 weeks, right?
Maybe more.
Maybe more, right? Depending if there's a backlog. But in a perfect world, right? Just in time production. They're going to get that product in a container within 2 weeks, and it's going to be at Long Beach, right? That's a long time period, right? And then the movement of that product from Long Beach to wherever else it's going, either by train or by truck, there's a lot of cost to that, right? So I think that the biggest benefit, I think we're looking at is we're going to probably get less business through Long Beach. As an example, we move a lot of product out of Long Beach, and there's a lot of companies and transport companies that are leasing our trucks out of Long Beach. Where are they going to come from now? Right? So it's a movement of hubs. So we as a company have spent a lot of money during the time of COVID in reinventing ourselves to have more of these e-commerce hubs. co-packing solutions. So a lot of it is just reshifting around where we expect the product to come from, right? And I do think that one of the huge benefits of this change is really the movement, right? Not having to hold that product for so long. You know, if you're building cars, right? We talk a lot about cars, and it's on the news today. They're talking about the the chips that go in the cars. Well, if you're building a car and you got to schedule your entire line to wait for those chips to come from China, what if they were built in Detroit? Right? What if they were close to Detroit? Now you don't have to order as much, right? You need less trade finance. You need less cash to buy those products. So I think that's a big change. I think that's probably the biggest change for us as an industry is just we're gonna be doing more movement inside of the country as opposed to going to pick up product at our ports and transporting that fully manufactured products and maybe the components of those products. We're going to have more movement of those components, right? So we may be buying those chips locally, and now, you know, General Motors, all the auto companies are customers in one form or the other. So General Motors is going to be asking us to bring in more parts from these different manufacturers in the country, as opposed to, you know, fully manufactured cars in Mexico,
yeah,
or in Canada. Right.
Yeah.
So if we shift those factories here, then we're manufacturing. We're buying from ourselves. So I think that's a big shift. You know, that's going to put a bigger constraint on our roads and our infrastructure. So we got to get really efficient at the way that we move product. So
yeah. Well, like I mentioned before, I mean, congratulations to China. They took a lot of advantage. I think the U.S. People in the U.S. recognize that, and now they're just, you know, trying to shift the supply chain, and now they're doing it massively. No, by the way, these things started happening, right, Chris? Have been happening for the past 5 to 10 years. People have been shifting already. It's just that this is a massive tectonic, you know, shift that is happening as a result of somebody, you know, just saying this has to stop. And one of the things that China has that is a little of an unfair advantage is, you know, they're a communist place where they force things. In the U.S., everything's a debate, right? We could say that some things are forced, but mainly everything is a debate. And nobody is hitting you over the head if you don't do it, right? So what happens is, you know, that's an unfair advantage. Now, so what does the U.S. have that I believe is different from China? And this has been proven time and time again, is the entrepreneurial spirit of the U.S. The U.S., because we live in a more free, they would say, society. People are creative. People think outside the box. And this is what, you know, this is one of the reasons why we still have the top educational system. People might not like it because in high school they might be teaching other things, but still, out of the top 100 universities, around 90% are in the U.S. Some of the places where we all went to school. And guess what? These people, we might not be, right, we might have to keep learning and rethinking and reshifting, but one of the things that you have that I think we do not take advantage of is our global network, building partnerships. And this is something that, why did you go to Harvard? Yes, phenomenal education. But truly, you can get a good education in at least the top 50 universities. What they get is a name and a network, no? And
The
networks.
most important.
So
I love that.
I have 9 more minutes, but I wanted to finish with that. You know, my bottom line is, you know, this global shift is yet to be seen what's going to happen. What I tell people is do not panic. Find the flow of things individually, and there you can make money if you are in trade finance, if you are looking at solutions for a particular area, if you are aware of technologies and rising technologies, by the way, Chris is one of the foremost experts that I know on crypto and anything that has to do with next level technology. And Mo Hassan is one of the top people that I know in AI. Guess what? And Ignacio in logistics and Mike Babbitt in trade finance. So, by the way, the people that are here are some of the foremost experts of these things in the world. I don't want to toot my own horn, but I do know these people very well for 20, 30 years. And I tell you, I rather have these people around me when I have a question, right? That's why it's so important to build relationships, right? You think it's not important. I'm telling you, if you want to be successful as a young person today, I tell you, you have blank slate when it comes to learning, but one of the things that you cannot do from behind the screen, or it's more difficult, is becoming friends with people, right? Usually, I take people to have a cigar, drink, a soda, a coffee, right? Give them a hug. And this is something that I hope and wish, by the way, my daughters are doing that, and they're being successful. So if I tell my own children this, I'm telling all of you as my friends, build relationships, build networks around the world, connect with people around the world. You don't want to be myopic and just stay with what's happening in your city. Think about around the world. We talked about, Ryan, right? Ryan, what I loved about Ryan from the very beginning is he told me, no, I want to meet people. By the way, Ryan is in California from Asian descent, but he loves the Latin culture, Brazil, right? And he's building those connections. Mo started, somewhere else around the world, and he's in Colombia and building connections, now doing things with Mercosur and doing things around the world, right? So again, that's the bottom line. I will shut up if anybody has any questions. We have 6 minutes.
Hey, Hernan, I want to ask you a quick question.
Yes, sir.
So in LATAM, considering the uncertainty that exists right now with tariffs, what is the strategy I should be thinking about for optimizing what's happening right now with President Trump's tariffs?
Well, so my opinion is, number one is, again, these things are negotiations. You saw how Trump went hard, but then softened his stance. So I think if you bring something to the table as a country that is of strategic advantage, that's going to give the U.S. some benefit, they'll be happy with it. So I think, and Mo, I told you, one of the things that people don't look at is the port data or the info, global transactions around the world and how they happen. I think if we focus on a lane, pick a lane, any lane, flowers, umbrellas, cigars, whatever that lane is, you're going to find opportunities to make that process better and then find that arbitrage where you're going to get a best credit. If all the businesses are moving back to the U.S., guess what? Whoever's borrowing against U.S. receivables is going to win.
Well, that's super good news. We have a meeting coming up with the Ministry of Trade to get all that data. So we're going to have all of that data accessible to us, and we can run any analytics we want with artificial intelligence.
Excellent. Anybody else?
Hernan, I would just say, with the consulting work that I do, of course, I'm getting a lot of calls about the tariffs. And, most of it, first, I'm telling everybody right now is be patient, stick to what your plan is, stick to what you've already decided you're going to do this year. Don't make changes just because the newspapers are sensationalizing something. Tariffs have always been with us, right? People don't realize. Last July, for instance, the administration put 100% tariff against Chinese electric vehicles, but it got no coverage. Nobody knows that, right? Most tariffs have been a source of income for many countries, and the country that they've been taking those tariffs from has been the U.S., and the U.S. has been happy to pay, okay? Today, we're not so happy to pay, and we shouldn't be. So I'm telling everybody that I work for right now to sit tight, stick to your plan, don't make any changes that are gonna affect anything dramatically, because right now this is you see, people also forget, like I was in Paris last week for the Paris Blockchain Week, and oh my God, if you hear these Europeans cry, it was unbelievable to me to some extent, right? And they're all saying, oh, we're just gonna, instead of selling to the US, we're gonna sell to China. It doesn't even make sense. China is the biggest producer in the world. The U.S. is the biggest consumer in the world. That's not going to change. The Chinese are not all of a sudden going to start buying because the U.S. is not buying, right?
Yeah.
So I really think that, this is not about, you said earlier, tectonic shift, right? I don't agree. I think this is a leveling out, and that we're going to come to a leveling where things are going to be more fair. The U.S. has been the doormat for everyone. The Europeans, for instance, why they have such social programs, it's because the U.S. has paid them for so long. It just really has been unfair, and we've allowed that to happen. It's our own fault. Okay?
That's right.
So now it's time. And of course, they don't like it, It's like, with your own kids. If you say, we have pizza every Friday night, now we're going to stop having pizza on Friday night. Yeah, they're going to say mom and dad are bad. They're going to cry and complain. It's the same kind of situation. Now the Europeans are actually going to have to pay for their own social programs that the politicians put in place just to get votes.
Yeah. By the way, Chris, so we have 1 minute. By the way, it's going to cut off. It's going to cut off. If you want to continue the debate, you can log back on. But I just want to say one thing. So 2 things. On Monday, we have our entrepreneur mastermind with everybody that has a business or trying to build the business. We're going to have a mastermind group at Apprentice just for entrepreneurs, for young entrepreneurs and founders. The second thing is, mark the calendar, May 16, 17, and 18. Mike, Chris, and a lot of the mentors are going to be with you, hopefully, in the Dominican Republic at our executive retreat. So mark your calendars. By the way, if you cannot, try to get it. The flights are cheap. The hotel is cheap. And if you have a problem paying the $99 for the conference, let me know, and we'll find a sponsor for you. But Mo Hassan is doing an AI workshop that just that alone is going to pay for 10 times what you're going to pay for the conference. Again, make the time to get together, come with us. These are the people, me. And like I told you, well, in the recording, since you guys left, I'm going to say to you that we're going to go back into another line now. Okay.